Let me know when you're ready. Just say yes.
Welcome to the Apartment Rockstar podcast. Join the Apartment Rockstar Robert Martinez, a real estate industry icon and two-time National Independent Renter Owner of the Year, as he interviews the best in multifamily apartment investing and management. Follow his journey to 10,000 units and beyond.
Well, hello everybody, and welcome back to another show and episode of Real Estate Investing with Jay Conner. I'm Jay Conner, your host, also known as the Private Money Authority, broadcasting to you live from right here in Morehead City, North Carolina. And we are broadcasting, when I say live, we're broadcasting live right now on Facebook, on our YouTube channels. So you may be tuning in right now live to where you can be asking questions and posting comments in the comments section below the video. If you're watching the replay on Facebook or YouTube, you can still post comments and questions, or you may be listening to my podcast on either iTunes or Google Play. And if you are, we really appreciate your feedback and appreciate you rating, and be sure and subscribe, rate, and review. And if you are watching on YouTube, be sure and tap the bell below the video so you can be notified when we go live with every one of our shows, so you don't miss out on any of our fantastic content and special guests that we have. If you're brand new to the show, and welcome Barry from Sebastian, Florida, just now joining us. If you're new to the show, we talk about everything real estate investing on the show: how to find deals, how to fund them, how to sell them fast, how to automate the business, how to run the business so your business is not running you, and how to get cash now, cash flow, and cash later. We've had some just fantastic guests here on the show, and today is no exception. I'm going to be introducing him to you in just a second. But before I do, I want to let everybody know that here in the midst of COVID-19 coronavirus, I got a special gift for you, and that is how you can get funding for your real estate deals without relying on any traditional banks or lenders, without relying on hard money lenders or any of the such. In fact, here in the midst of COVID-19, many of the hard money lenders have actually paused originating notes. But I've got funding for you available right now, and it's a free on-demand class right now. It's www.jayconner.com/money podcast. That's www.jayconner.com/money podcast. Check out that website when we finish the show today, and I will teach you right there, right here on your laptop or on your mobile device, the 5 easy steps to getting funding for your real estate deals. Again, regardless of what your traditional lender or hard money lender or broker would say to you, it's got nothing to do with that, and you're going to be thrilled when you tune into this information. Well, folks, I'm so excited for the first time ever to bring to you as a special guest here on the show a gentleman who has really trailblazed the road and the pathway when it comes to multifamily, how to put it together, how to manage it, and how you can be involved totally passively to get high rates of return safely and securely. My special guest is Robert Martinez. He's the CEO of Rockstar Capital. He's based out of Houston, Texas. And Robert just started this company back in 2011. Now, he's been investing in real estate many more years than that, but he established Rockstar in 2011. And in these few short years, he's already grown this phenomenal company to a portfolio of $380 million in this portfolio. So he's got 17 city, state, and National Apartment Association awards. And beyond that, he's got Rockstar Capital has been ranked in the top 1% nationally for online resident satisfaction. That's out of 101,000 communities. So what an accomplishment that Robert and his company has achieved. Rockstar Capital, Robert's company, was included in the prestigious Houston Business Journal, Fast 100, and it's in the 15th fastest growing privately held companies in Houston. As I mentioned, he cranked it up in 2011. The portfolio has got a value of $380 million. And other than winning these 17 National Association awards and being featured on CNBC, Money, Forbes, Entrepreneur, you can also follow Robert on his show as he documents his journey on his YouTube show. With that, it's so exciting to have here on the show with me, Robert Martinez. Robert, welcome to the show.
Hey, how are you? Thanks for having me.
Oh, well, you're welcome, Robert. It's good to have you on here. And you've got quite the story here. What I want to know is how do you start from scratch and build a company and a portfolio of $380 million in such a short period of time?
Yeah, well, certainly, you're not born into this, right? You have to kind of find your path along the way. And my path was similar to many other people that are probably listening. I went to school and got good grades, like mom and dad told me. I went to a good school at Texas A&M University. I graduated with an engineering degree, and I hit the oil and gas market in 1997. In that time, I had a sales profession. I was involved in selling high-end pieces of equipment, rotating equipment to people with PhDs and heavy engineering backgrounds. But like so many others in corporate America, if you're a good sales guy, they want to kind of keep you here when you need to be here. And so as the years went on, they would monkey with my commission plan a couple, 3 times. And I realized that, I didn't have control of my financial future. My boss did. And so with that, he had control of the kind of lifestyle I was going to lead, the kind of school my kids were going to go, and overall just when I was going to retire. And I didn't like that. I wanted it back. It's not what I signed up for. I'm a big guy that I want to be rewarded for my efforts and my contributions to an organization. I don't want them to be cut. It's the greatest way to de-incentivize a sales guy. So I began looking around for other opportunities to first supplement my income. I got involved with a real estate club, and I wanted to make sure that if I got involved in real estate, I was going to learn the right way. Education is key. It's vital to having long-term success. I joined the club. I learned a little bit about single family, but I fell in love with multifamily. Unlike single family, where you have a comparison to other homes in the area, in multifamily, you can force appreciation. Every dollar that you add to the NOI, whether it comes from rent growth, whether it comes from expense optimization, creates $17 of valuation. So every time somebody renews an apartment, or every time you save on a new service contract, you've added value to your portfolio, to your community by 17 times. So $10 is $170, $100 is $1,700, and so on and so forth. So you can get really large valuation increases, and when you do that, you can go and really add some tremendous worth to yourself and for your investors. In 2007, I joined the real estate club. Over the next 3 to 4 years, I served as the operating arm, went through the recession, and I ran over 2,000 units within that company. In 2011, I went on my own, started Rockstar Capital Management. Today, we have almost 3,800 units, and I've returned investors I've done 12 100% cash out events for my investors. That means the investor would give me money, I would inject it into the new property we bought together, I would fix operations, I would do renovations, and over a 3 to 4 year period would force valuation increases. Then I would refinance the property, pull all the investor cash out and give it back to the investors. And at the same time, we hold that, and we hold it for the long term, 7 to 10 years. And I've been able to do that 12 times.
That's pretty impressive, Robert. You mentioned just a moment ago a strategy that would increase the ROI or the returns 17 times. Explain that to us very, very simply. How is it that you do that?
Well, remember, it's all about the valuation. And unlike single family and multifamily, your valuation is based on the NOI. The NOI is the rent minus expenses, or income minus expenses equals your NOI. Every dollar that you add to the NOI, you've created $17 of valuation to the lender when they apply a cap rate. Today, the cap rate in Houston, Texas is anywhere between 6 to 6.5 for affordable housing, a working class housing, Class B housing built in the 1970s, 1980s. And so as you can get a rent increase on 100 units, or you can add tremendous valuation. As you can save on a service contract, it all goes back and trickles down to your NOI, making your property more valuable. So over period of 3 years, we're going to do a heavy renovation. I'm going to replace all the air conditions. I'm going to replace the roof. I'm going to replace the siding. My team's going to come in and we're going to operate it better than it's ever been operated before. Many of the buyers that we buy from are mom and pop type people. They've held it for 10 years or they're out of town buyers, and they're just not as sophisticated as we are. As I said, I ran 2,000 units long before I ever took one investment dollar from anybody else. And so we take that experience, we take that knowledge, and we increase the valuation of the property. We bought a property in 2012 that we paid $2.9 million for. We sold it in 2019 in December for $8 million, returning 673% back to the investors. And we've done that again and again and again. That's what we do in the apartment world.
You mentioned NOI, of course, that's net operating income. And so we have a number of folks here attending the show that are brand new to real estate. Others are very, very seasoned. And by the way, folks, if you're just now joining us here on the live stream, my special guest today is Robert Martinez, CEO of Rockstar Capital. Just began in 2011, and in this short period of time has built a portfolio to $380 million is the value of the portfolio. And so, folks, you got any questions or comments for Robert? He's here and ready to answer your questions. Robert, just a moment ago, you mentioned this thing called cap rate. And of course, cap rate exists in this world of commercial, but does not exist in single family. So real in very simple terms, explain to everybody, what is cap rate and what's that got to do with the valuation of a property and how it works?
So the easiest way to explain it is that if you were to buy a community in cash, that's the only way I know how to explain it. Let's say that property's worth $1 million. And there's no debt on it, which gives you your leverage, right? You should have an increase in returns when you borrow or you add leverage to something, just like you do with single family. There is an expected rate of return that you expect to make if you were to buy it all cash. That is the easiest way. In this case, I use the 6% cap rate. So if you were to buy something all cash, it would be producing a 6% return after all expenses. If you apply leverage to it, then of course your returns go up from there. So that's called the capitalization rate.
All right. And then how do you use cap rate to calculate the value of a property?
Right. So the cap rate is really the balancing act between buyer demand and seller, right? So it's the going in number that somebody expects to make. So as prices start to get more and more competitive, the cap rate comes down. What we do is that we were to apply the NOI. So let's say if you pull your calculators out, right? And you have a 100-unit property, and you've added $10 to the rent. Everybody's renewed. Everybody's going to stay. It's 100% occupied. You've added $1,000 of NOI to the monthly NOI. You multiply that times 12. You've got now $12,000 of new income that wasn't there the previous 12 months. You apply a cap rate of 0.06 or 6%, so 12,000 divided by 0.06. You've now added $200,000 of valuation. That's crazy. Tell me how you can do that anywhere else. A $10 rent bump on 100 units over 12 months creates $200,000 of valuation. That's huge. So, but imagine now if you've increased it to $20 or $50 or $100, and it just doesn't work on rent. Let's say you've redone your service contract, your landscaping contract, your trash contract. You found a better way to source your materials to get your units ready. Every dollar added to the NOI creates massive valuation. When it's a 6 cap, it's around a 17 to 1 valuation, and I'll show you that. Take $1 divided by 0.06. And you have 16.67.
And that's where you get your the 17 times return
Yes.
that you were talking about at the beginning of the show.
Right. And then we're going to go and get it reappraised by the lender 3 or 4 years later. And we have a new value. And when that value comes in, we want to borrow the money back out just like we did before. And when you pull that out, it's a tax-free event. It's like a home equity loan. We're doing a home equity loan on the apartment complex we all bought together. We get this big chunk of cash, and I give back to everybody their pro rata share, tax-free. And you now own the property outright, and you have all your cash back.
Beautiful. If you're just now joining us, folks, my special guest today is Robert Martinez, CEO of Rockstar Capital, and he's talking about how to get high rates of return safely and securely in this world of multifamily, how you can be a passive investor with Rockstar Capital and enjoy these kinds of returns. Robert, why apartments versus single family houses?
Because apartments give you a chance to buy large amounts of doors. For me, I like more doors is the better. You know, when you're buying a single family house, or whether it's 1, 3, 5, 10, you've bought yourself a job. It's what you have. I know that because I see this every day. You know, it's just like the Subway franchise owner. He goes and he's excited. He goes and he buys his first franchise. But in reality, all he did was buy himself a job because he's the one that has to go and collect the money from rent. He's the one that has to source the handyman to come in and do the units. With multifamily, you can put in large amounts of cash in there at one time and buy several doors. You can afford a property manager. You can afford elite maintenance. Additionally, there are certain tax benefits that are available to multifamily investing that are not available to single family investing. And that's huge. I can buy an apartment complex for 3.25%, 3.5% on the interest rate. When I sell it, you know, and while our ownership, we can apply depreciation. That depreciation can be accelerated using a cost segregation study. And I don't want to get too advanced, but it gives you an opportunity to really, instead of doing the normal 27.5 year depreciation, you compress it in a 1 year, 3 year, 5 year kind of depreciation schedule, which comes back to your family income, giving you an opportunity to not only not pay taxes on your profit or have it tax deferred, it can go against your other income as well. There's a wide variety of advantages in multifamily over single family.
So let's talk about how people can be involved with Rockstar Capital. So you have people that invest with you. Do you have accredited investors only?
No, we have both. We have accredited and non-accredited. I've been doing this since 2011. I've bought deals as small as 51 units. I've bought deals as large as 276. We have a deal that's specific for accredited or specific for non-accredited. In that time, we've raised $100 million of what I call country club money. It's not fun. It's not high-end investors. It's not a large family office. It's just everyday people like us. You know, it's friends, it's family, it's my mama's money, it's teachers, it's doctors, it's anybody that wants to try something other than the stock market. And frankly, I have a lot of investors who are very excited right now that they're in multifamily investing and not in the stock market, because none of my investors lost a single dollar during the stock market, but yet we're still holding valuation on our multifamily returns. And so you could find us at rockstarcapital.com and sign up on the investor link to be an investor.
Yeah, I know what you mean. I've got 48 private lenders, country club money, if you will, teachers, retirees, and they are very, very excited to be with me as your investors are with you, and very happy that their funds are not in the stock market. So since 2011, and I know history does not guarantee to repeat itself, and you're not offering any guarantees, but just for the sake of conversation, what kind of returns have your investors received over the years from Rockstar Capital?
Well, for sure, the best time to invest in real estate was yesterday. So certainly the deals that we bought post-recession are the very best deals. The one I mentioned to you before was bought in 2012. It was refinanced twice. So we put a bunch of cash out, and then we finally sold it in December of 19 for 673% return over a 7-year cycle. The newer deals, so what we try to do is we're going to give you anywhere from a 6 to 7% cash-on-cash return yearly. But at the same time, we're also increasing the equity. And so while you might have this cash return, you have to factor in the equity that we're building, the appreciation that we're forcing with the whole $1 equals $17 valuation. And in 3 to 4 years, we're looking to refinance the event, add debt to it, pull that debt out, return it back to the investors, and now we own it tax-free. So I've only sold one deal. I own 21 deals today. I've only sold one. It's the one that I told you that we made 673, but we have other deals that we've held for quite a long time. We were gonna refinance a deal this year, which would have returned 103% from 2016 to today, but financing got a little squirrely, and it's not that the deal doesn't have the numbers, but Fannie Mae's now added some additional guidelines that make it a little prohibitive, prudent for them, but prohibitive for us to want to secure a new loan and have to put, some of that proceeds in the reserves when it's unnecessary. So we're just going to wait on that. But, it ranges, 6% to start, and then we grow the asset together. My team and I will make the improvements necessary. We'll force depreciation. In a 3 to 4 year cycle, we'll pull the money out. Our goal is to hold it 7 to 10 years where you can expect to receive a 3x on your money. So 50,000, 100,000 in 2020 should be nothing less than 300,000 plus your initial investment back in 2030.
Okay, wonderful. If you're just now joining us, my guest is Robert Martinez, CEO of Rockstar Capital. If you're viewing on the live stream right now on Facebook and YouTube, be sure and submit your questions, and Robert will get them answered. Robert, we got a question submitted from Andy, and Andy says, I'm not sure I understand Andy's question. Perhaps you will, Robert. Andy says, If you buy at a 6% cap, how much cap do you sell it?
That's a great question. So as the cap rate changes with the economy, when I was buying deals in 2008, 2009 during the recession, the cap rates were closer to 8, 9, 10%, meaning that if an investor were to pay all cash, it was a higher return. So the pricing wasn't as competitive as the market got stronger, as residential housing got firmer in Houston, as we came off the recovery, people are wanting to pay more and more. So that would compress the cap rate. The cap rate has been around 6% for the last, 3 to 4 years in Houston. So the idea is we're going to sell it for the cap rate that we bought it at. Obviously, you have to stress test it. Every one of the deals that we do, we want to stress test and make sure that if the cap rate moves against us, then we can still sell for a profit. Right now, with the coronavirus and deals, anything you were to buy today is probably not going to be worth that tomorrow because collections are in flux right now. And some operators are better than others. So I'm hoping that we will be able to sell it back for a 6 cap rate, 6.5 in that range when the coronavirus passes and everybody gets back to stability. Because I think we can all agree that this was a one-time event. I'm sure the market in North Carolina was very strong. It's very strong here in Houston. It's strong all over the country. Unemployment was at a record lows, and I think people want to get back to where the economy was. So that would dictate the economy. That would dictate the cap rate.
Yeah, excellent, Robert. So this question, Robert, you mentioned, of course, we're here in the midst of coronavirus, and there's a lot of people that have been laid off and et cetera. You got a lot of doors, you got a lot of units, you got a large portfolio, and what I'm really excited about having you here on the show is because you just don't have 1, 2, 3, or 4 or 5 single family houses. You've got a large number of doors, which really can give an indication as to really how much the economy is being affected with people, losing their income. So what kind of percentage rents are you able to collect, say, from 60 days ago? How well are your tenants paying?
Right. So number one, you have to help the residents out. You have to help communicate with them because everybody is getting the information from somewhere. And more importantly, they are afraid. When this first broke in the 20s, I think March 23rd, there was a lot of misinformation. There's a lot of confusion. And we have to be the adult in the room. We got to make sure that we bring some order to the chaos. So number one, we warm called all of our 3,800 units. And we explained to them, hey, here, how are you doing? What's going on? Hey, the virus is going to force us to close our apartment doors. It's going to be by appointment only. We're not going to be able to come into the units and do work orders, so get them in now. It'll be emergency work order only, right? But then at the same time, say, hey, have you been affected by this? Okay, are you aware there's a stimulus check coming? Are you aware that there's unemployment benefits? Right now, as you know, the Congress passed an additional $600 of unemployment benefit. So if they apply for unemployment, right, they can get their normal amount. In state of Texas, the max is $521, but now they're getting an extra $600 a week, right? A lot of our renters don't know that. They don't understand the system. They're watching social media, they're watching CNN, Fox News, the president, and reading whatever they see on Facebook, and they're trying to, they're trying to create a narrative around it, and it doesn't all work. They need to understand the benefits are there so that they don't get afraid, because when people are afraid, they hoard. You saw it happen with toilet paper. You see it happening with eggs. You see it happen with craziness, right? It's there. Supply is not getting cut. There was no shortage of toilet paper, right? There was no shortage of eggs, but people were afraid, so they hoarded. So you got to reduce the fear. We got to control the narrative of what's going on. So first thing we did was, hey, we're going to help encourage you to pay rent. So if you can pay your rent on time like you normally can, we'll give you 5% off rent the following month. That had a tremendous amount of benefit for us. By March 4th, we had collected 85% of the rent, which was very good for us compared to our peers and compared to other people nationally. So we were excited about that. Now we have to worry about, okay, how much more of the rent is out there? What can we do? Well, we created payment plans that work with everybody. We gave them due dates. We followed up with them, again, in a very empathetic, sympathetic kind of way, because we're all in this together. At the same time, you've got to hold everybody accountable. Hey, do you know that your rent payment, your housing partial payment is due on the 10th. You have another payment that's due on the 20th. Are you going to be able to make your payment? Have you kept your employment? Have you applied for any of the assistance programs? Because again, if you're getting 600 plus 521, 1100 a week, there's no reason that you shouldn't be able to cover your rent payment. But you get afraid and you have fear take control, and then you start to hoard and you don't pay. We've been very successful. We billed out over $3 million for the month of April. And as of this morning, we had collected 95% of the money, which was really great for my investors. They were excited about that because they have fear as well. We're able to authorize a distribution now because we have 6 months reserves. You prepare for today's event years ago. You prepare for today's event, but not yesterday. You have to do what it takes to prepare for a eventuality where the rules of the game change, and that's what we've been doing together. We've been preparing for when the rules change. So we're excited. We're at 95% economic occupancy right now with our rents.
One of our viewers named Barry has submitted a question, Robert. Barry asked, what are the minimum number of units per complex and maximum age of the buildings that you look for?
I'm in a different part of my development than what I was before. So, it's Robert of 2020, not Robert of 2011. If I was starting out today, I would not look for anything smaller than 50 units. 50 units allows you at a minimum to be able to employ somebody to be your property manager. Otherwise, you got to be the property manager. And now you've added a day job because the money you're making off of 50 units is not enough for you to quit your day job. So you got to pay for somebody, right? And so you need 50 units. And if you want to have a maintenance man, you need anywhere from 80 to 100 units. So I personally don't own anything smaller than 120 units right now because I got to have a full-time manager and I got to have a full-time elite maintenance outside that's HVAC certified. As far as the age of the building, the older you go, it's getting older. You have piping issues, you have electrical issues. I have a couple of properties that were built in the 1960s that I bought early on. I think as you grow and as you get larger, you don't want to worry about those deals because those deals are more prone to having deferred maintenance. No matter what you do to fix it in your initial renovation plans, stuff's going to break. Something else is going to break. It's just going to get older and older. So our target deal is anywhere from 200 units and above, and we're looking at 1980s and above. Our two most recent deals we bought were down in South Texas. We're actually both Class A deals that had more than 200 units, and they were built in 2017 and 2015.
Wonderful. Robert, it's been great to have you on the show. How can people contact you and your company and find out more about investing with you?
Well, for sure. If you want to be able to invest with me, if something I've said something I've said today is something that you think works with you and you want someone to work with you on your investment strategy, please find me at rockstarcapital.com and sign up to be an investor. You'll get you'll be included on all of our distribution email lists. You'll get case studies, you'll get videos, you'll get a wide variety of information that we share with our investors. If you want to just learn and educate yourself, please follow me on Instagram under Apartment Rockstar. I've got 56,000 followers on Instagram. And all we do there is promote little videos and little micros and memes and just kind of document our history and our story as we run through our company. If you want to get some more useful articles, you can find me on LinkedIn under Robert Martinez, or if you just want to be my friend, find me on Facebook.
That's awesome. Robert, thank you so much for taking the time here in the midst of uncertainty to join me on the show.
Hey, thanks so much. I appreciate the time.
Absolutely. Folks, thank you for taking the time to join us here on the show. I'm Jay Connor, the Private Money Authority, wishing you all the best. And here's to taking your real estate investing business to the next level. We'll see you on the next show.